Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and a very happy Monday. In today's program, I want to have a quick discussion about two opposing views and have a little look at why the market is sort of, enjoying itself in the sun, so to speak. But before we get to that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. Okay, so first of all, I want to talk about two opposing views from two major banks, okay? Because two major banks in America are disagreeing over the impact of weaker economic data on the Fed interest rate decision, okay? Now, one central bank, one analyst for Morgan Stanley, Michael J. Wilson, he believes that no matter if we get weaker data, it will not change the direction or decision of the Fed with interest rates. He says, and I quote, "Markets may try to get ahead of the eventual pause by the Fed." That means holding back on raising rates. The problem is this time the pause will come too late. Now, Wilson is a very well-known bear, okay, and he did call correctly this year's sell-off. He did predict that correctly. So he might have a point. On the other side of this argument, though, from another central bank, JP Morgan's Mr. Matiga, I believe that's Mecha. I'm rubbish at surnames. I do apologize. I'm really rubbish. Anyway, he says challenging activity momentum and a softer labor market could open up doors to more balanced Fed policy. So he believes that if we start getting negative data, then the Fed will go easy on us. And that's not the only thing at the moment. I don't think he's the only one feeling that, because the markets, against all odds, are actually having a really good July. In fact, the Nasdaq is up by 7.5% so far this month, and the S&P is up by 4.8% this month. And if we look at examples of some of the earnings as well, though we did have dramatic Snapchat earnings report, which they fell by 25%. Don't forget, we got Netflix, who was, again, slightly pessimistic. It missed their earnings target, but it's up 25% so far this month. So why is this? Why is the market feeling in a good place at the moment? Well, I'll share it with you. Basically, in a nutshell, the market is sort of guessing now that the Fed is going to come to the end of its raising interest rates. They believe the Fed is going to start slowing down, raising interest rates, which means we won't quite slip into a too dramatic recession. Okay. Now the market is sort of pricing in at the moment 75 basis points on Wednesday, and only a rate hike of 50 basis points in September. Now, in my opinion, that's pretty optimistic. Okay. I probably think I'm probably more with Mr. Wilson. That sounds like a character. Mr. Wilson, I'm more with him, because the way the Fed has been so incredibly hawkish in past press conferences in relation to getting their inflation number down to 2%. Don't forget, it's 9.1 at the moment. I'm more likely to think that they are going to be quite aggressive in the future. Whether we'll see 100 on Wednesday, I don't think so. I think we'll see 75, like the market's pricing in. But we might, I believe we might see 75 again in September. But then again, who knows for certain. But anyway, this mood the market is in, its impact is basically weak US dollar. That's the that's the attitude of the market because of this slightly optimistic feeling. And let's have a quick look at how the dollar is doing at the moment. Right, first of all, this is the euro. Like I say, last week with the interest rate hike, it gave it a boost. But then after that disappointing press conference and the Italian crisis, it came under pressure. But since Friday and since that negative US PMI, it has got a bit of a boost. So it's currently trading at the moment 1.0245. Under that key area of interest, though, of 1.0268. So indeed, need to keep an eye on that. Cable. British pound, sterling, again, doing very well against the US dollar at the moment. It was under pressure last week, but on Friday, the UK had a good PMI, actually a very good PMI, and the US had the poor PMI. So this is why we're seeing sterling strength. Currently trading at 1.20696, and again, trading currently above that key level of 1.20034. Gold, again, is bounced back as well, like we said earlier on this morning. Currently, still still under that key level of $1,727. So it can't quite break through that level at the moment. But yes, indeed, gold is striking back against dollar because of the weakness of the greenback. S&P 500. Let's have a quick look at the S&P 500. Where that is at the moment. Okay, it's sparked down a little bit in the US trading session, but like I say, it is having a good month. It is up currently 4.8% this month. Currently, it's trading at 3,967 points. And obviously, we can see a little bit of buying power around 3,950 points. So, yeah, there we go. Weak dollar across the board at the moment. So, interesting. But like I said, I think this little optimistic mood, I don't think it would last all week. I really don't. Because the markets, as we know, sorry, I got a bit of indigestion. The markets, as we know, can change like that. And there is something else I want to briefly have a chat about, which I think the market's not really paying attention to it at the moment. But I think this is a story ready to break. And that is a housing crisis in the United States. I know I've spoken about it in Canada, but I think there's also a potential housing crisis in the US. And I'll explain to you why I think that. Now, US monthly mortgage payments on the average US home last month was $1,613. That's up by 4.5% from a month ago and up by 62.2% from a year ago. Okay. Now, mortgage rates have surged to these levels. Haven't seen these levels since December 2008. And we all know what happened in 2008. We had a huge credit crisis, and the housing market collapsed in the United States. And obviously, we're at those levels of 2008. Now, RBC Capital Markets, Tom Porcelly, he says housing is likely at the beginning of recession. Of course, a large amount of activity was piled down during the pandemic. You then factor in raising interest rates, then the housing market are sure to fall hard. Okay, so this is really interesting to see. So I'm going to have to keep a close eye on this because I think he has a point. And if we do see a housing crisis, the knock-on effect will be recession. Now, new home sales comes out tomorrow, due at 2 p.m. UTC. I don't usually look at this, but because of this housing market situation, which I'm keeping an eye on, I will keep a close eye on this event tomorrow. So please bear that in mind. Of course, as I always said this morning, those of you who were kind enough to join me this morning, we've got a massive week ahead of us. Of course, we have U.S. durable goods, U.S. consumer confidence, U.S. new home sales, the Fed interest rate decision, Fed monetary statement, Germany CPI, U.S. GDP, German GDP, EU GDP, and EU CPI. Plus, we have earnings, Alphabet, Microsoft, Meta, Apple, and Amazon all this week. So a big week ahead of us. And the markets, as they stand, like I say, slightly bullish. FTSE up by 0.5%, 50%. DAX currently trading at 0.28%. Euro Stoxx 50 currently trading at 0.71%. So anyway, that's my 10 pence worth for today. I know it's a little bit shorter than normal because the market is a little bit sideways and there's not a lot of key developments happening at the moment. But like I said, we have got a gigantic week ahead of us. So I hope you can join us. So remember, you can ask me questions anytime you wish, or simply just say hello if you like. And don't forget, if you think of a question later, you can put it in the comments on Facebook and YouTube. I will see them and I will reply to your question next time I'm live on air. As there's no questions at the moment, not a problem. Don't forget, I'll be back online again tomorrow at 8 a.m. UTC and 1 p.m. UTC. I also will let you know when I'm going to do, what watch along I'm going to do this week and when it's going to happen. But anyway. Yeah, that's a good question. I'm still just trying to decide which is the good one. Because obviously I'm going to do a special. I am going to do a special on the FOMC, but it won't be, it'd be a bit different, that one. But the watch-alongs, I'm probably swaying with US GDP and EU CPI, because I both think those two events are going to be fascinating. But I will confirm that with you, you kind people tomorrow. Anyway, remember, like I always say, if you're watching me on Facebook, by all means, give us a follow. If you're watching me on YouTube and you like this little video, by all means, subscribe if you like. Hit the notification button so you know next time you know when I'm going live. If you enjoyed this little video, give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.